This is India, one of the fastest growing economies in the world. India is the home of roughly 1.3 billion people. Journey of India from being one of the poorest country to the fifth largest economy is quite interesting. Some analytics say the Indian economy could expand with an unbelievable rate. But there are still a lot of things that are putting questions on India's economic growth in the future. Higher unemployment rate and economic inequality are some of the major problems. Like these, India is facing many problems even after higher economic growth. But even with all these problems, Indian economy has grown incredibly in the last 2 decades and lifted more than 271 million people out of poverty. But the question now is, can the Indian economy grow with same speed in the future? Or, what is slowing down the growth of Indian economy? Well, like these there are many questions. So make sure to watch the full video. Let's begin with the history of Indian economy. India was a former British colony. British rule in India ended in August 1947. In this 200 years of rule, India was literally looted by the Britishers. India's share in the world economy was 24.4% in 1700. But it went down to 4.2% till 1950. After 1947, Indian economy was broken completely. So to start the economic growth, India adopted the Soviet economic model. This model brought 5-year development plan and nationalizing major industries like mining, insurance, banking, telecommunication, and transportation. This protectionist policies were to promote and safeguard domestic industries. Also, India's past experience with global trade was not pretty good. This is because under the name of global trade, the Western countries entered India. And you know what happened after that. So India decided to grow its economy on its own and not actually allow large foreign investments. As a result of this, Indian economy didn't grow that much. Due to corruption and license issues, private industries were limited. High poverty percentage and unemployment were also some of the big issues. But all of this started to change from 1991. As in 1991 the Soviet Union collapsed. They were India's main trading partner. Also due to the Gulf War, crude oil prices were high. And this is not good for any developing country like India. This led to increase in poverty rate. And India's foreign reserves started to drain with much higher speed. So to save the Indian economy, India went to the International Monetary Fund for loan. But to get this loan, India agreed to reform its economic model from socialist economy to capitalist economy. That leads us to the second point. Growth of modern India's economy. So after 1991 reforms, India adapted economic policy of liberalization, privatization, globalization, which is also known as LPG. After these reforms, India actually saw a massive economic growth. India's private sector showed a huge boost and created millions of jobs. Particularly India's IT sector was growing incredibly. By 2007, India's IT sector was generating nearly $23 billion. And by 2018 it was generating nearly $167 billion. IT sector has increased its contribution to India's GDP from 1.2% in 1998 to 7.7% in 2017. The Indian economy has grown nearly 9 times since 1991. In 2019, India surpassed UK as its former colonizer in terms of GDP. But now the question is, what recently slowed down the economic growth of India? From last few years, Indian economy is struggling to keep up its higher GDP growth. India's automobile, construction, and agriculture sector has been hit hardly. And there are many reasons behind that. One of the major reasons is the banking sector. While going through economic growth, Indian banks have given massive loans for businesses and infrastructure projects. But some customers fail to repay its debt. And due to high non-profitable asset, banks are now hesitating to give loans for businesses. Plus the trade war between US and China slowed down the foreign investment. Also, India's GST implementation for tax collection damaged the small businesses. Yet it was a good move for the economy in longer run. And we could see benefits of implementing GST in coming years. But in short run it has done the damage. Some economists also blame the government for their demonetization stunt in 2016. This demonetization resulted in disturbance of cash flow in the economy. So government clearly failed to notice all these problems. Due to this, India's GDP in the third quarter of 2019 was 4.7%. This is the lowest GDP since 2013. And lower GDP means lower job creation. Today India's unemployment rate is highest in the last 45 years. Also the damages to the economy due to COVID-19 pandemic are still unknown. Now this leads us to the third point. The future of Indian economy. Any country that achieves economic growth is due to basic conversion from agricultural to industrialization. And time that has taken to convert economy of a nation from agricultural to industrial has reduced drastically. For example, Britain, where the Industrial Revolution begun in 1760. It took decades for Britain to convert into fully industrialized nation. But the case is not same with China. The conversion of China from agricultural to industrial only took 30 years. And today China is second largest economy in the world. This reduction in time happened only because of technologies developed by the Western countries like USA and Britain. It took them decades to develop and optimize these technologies. Due to this, countries like India are growing easily with these developed technologies. Another advantage that India has is India's 1.3 billion population. Out of this, 65% population is below the age of 35. This means India has large amount of workforce available to work. And also nearly 10% of population in India speaks English. And this gives them advantage over other countries like China. In China only less than 1% of Chinese population speaks English. This will give businesses more advantage in India, as English is the most popular language used for global trade in the world. Even when India's more than 50% population works in agriculture sector, India became the fifth largest economy in the world. Imagine what India could be when they become a fully industrialized economy. Today COVID-19 pandemic is affecting global economy. And global economies are already facing a major economic downturn. But India could get lot of benefit from this pandemic. Yes. For a short period India will also suffer from economic slowdown. But in future economy could see a major growth. As different countries and companies are facing lot of problems to operate their industries from China. This is due to US-China trade war and rising labor costs. So these companies are looking for new countries with similar advantage as China. And India could be that option. To know more why companies could move from China to India, watch our detailed video linked above. Now we have to understand that India is in the same position as was China 15 years ago. But India has lot of advantage over China. This does not mean India will take over Chinese economy or US economy. But India is going to pull out a lot of its population from poverty. With right management and economic reforms. Also with massive infrastructure development, Indian economy will see a massive growth in the future. To know more about India's recent economic reforms, watch our detailed video above. Now we would like to know from you. What should India do to improve its economy more? Please let us know in the comment section below. We hope you liked this video. Please like, share and subscribe to Global Index to get more informative content like this. Also make sure to hit the bell icon to be notified every time we upload a new video. Thank you.